Ladies and gentlemen, our program will begin in 10 minutes. Ladies and gentlemen, our program will begin in 5 minutes. Ladies and gentlemen, our program is about to begin. Please welcome Rachel Oppenheim, Chief Revenue Officer at Semaphore.
Hi, good morning, everyone. How are we doing? Great. Woo. Okay, great. Well, thank you so much for joining this morning's session of Semaphor's 2025 World Economy Summit, which is taking the pulse of consumer confidence. I'm Rachel Oppenheim. I'm Semaphor's Chief Revenue Officer. We are the world's fastest growing independent news platform, and it really is such a pleasure to welcome you here on day 3. At Semaphore, what we are doing is building the definitive global news platform for decision makers. We're a trusted voice serving 5 million readers, 800,000 subscribers, and standing up, of course, a live journalism business that has become a genuine magnet for impact and for influence and also for ideas. In 2 years, we've created this new kind of news brand, and we are global by design. We're deeply credible, working to prioritize balance and focused on bringing together folks like yourselves who are shaping the future. The World Economy Summit, which you're all a part of, is really a bold expression of that mission in action. This morning, we're turning our attention to the question that is front of mind for every CEO right now. Where is the global consumer headed? As spending patterns shift, inflation ebbs and flows, and also economies all across the world recalibrate, understanding consumer behavior, it's not a nice to have, it's essential for staying competitive, relevant, and also resilient. So we're gonna hear very shortly from leaders who are deep in the mix, tracking these trends, shaping their strategies, and adapting to a world in which the only constant is change. Before I begin, I want to extend a very sincere thank you to our presenting partner, PMI, without whom conversations like this would not be possible. Please join me in welcoming to the stage PMI Global CEO, Jacek Olczak, along with Semaphore's co-founder and editor-in-chief, Ben Smith.
Hello, thanks for coming. I'm always stressed to do the first panel and afraid of walking into an empty room, so I particularly appreciate your all being here. And thanks for joining us, Jacek. I should say PMI is a sponsor of this event, but this is an editorial interview, and so which you have chosen to be given a hard time.
I may regret.
Yes, you may regret it. You can tell me after.
Too late.
And I should tell you. Given that it's now day 3 of this event, it seems to be powered slightly by Zins. A lot of the folks putting this thing on have been
well, thank you.
have been relying on them. So your shares are, I think, maybe the best performing stock of the Fortune 50 this year. Obviously, been a bit of a tough year in the equity markets. Does that just reflect like a sort of traditional flight to high dividend stocks at a bad moment? Is it because nicotine is recession proof? Or do you think that I think a lot of your career has been about a push to have the markets and have society view nicotine not as a lethal pariah stock, but as a normal, a normal consumer company. So how do you explain it?
Yeah, I think, there are a number of factors, right, which always impacts the stock, the share price, but I think the market, the investors are fully on our side when it comes to what we call internally the transformation, which is, we know that the cigarettes cause the problems, quite the significant health problems. The question is that people using the cigarettes despite the fact that, they know what are the risks associated with smoking. Many will tell you because the cigarettes and nicotine is addictive. Okay, very fair, but what is then addiction? And this is what many years ago happened at Philip Morris, that without understanding and addiction, you cannot actually help people. You cannot unwind them from the habit. And the question is that if you define the addiction as the repetitive use of a product or some repetitive behavior, etc., you need to understand what is the benefit. Perceive a real benefit. And this drives you, in our case, to the role of nicotine. Yes, on the one hand, we call it is an addictive substance, no questions about it, but what is the benefit with the consumers deriving from nicotine? And there is a well-established science, not just the Philip Morris science, about the impact of nicotine on the certain cognitive skills. Actually, the same skills which later on, over age, etc., are fading out. You have Alzheimer, you have Parkinson, and so on. So that's from a pharmacological perspective, role of nicotine helps you with controlling your attention, focus, time to react. When you go historically, which of the groups in a societies were using smoking cigarettes more than others? One of the group, for example, were truck drivers. Interpretation was the blue collar, low income. This is what they're doing, but you put yourself in the shoes of the truck driver, you exactly understand where is the story about the focus, span of attentions, that sort of the things. So we built building the new company. So we are Philip Morris, obviously known for the Marlboro, many other great cigarette trademarks, and we're actually leaving the industry. And I think when we unfolded that story to investors, and I remember it was at the time when I was still a CFO, and you have to do the all the shows and demonstrate your stories. For many investors was why you breaking a toy of a well-performing cigarette business. I said you cannot build a great business on a product which has a problem. But we can build a fabulous business if you unwind the problem of the product and go somewhere else. So I think the stock price, the valuations, you could see the valuation of us versus our former peers from a cigarette industry. When a classical tobacco cigarettes are valued at, at a given moment, 8 to 10 times multiple, we are valued well above 20. So actually, Philip Morris is leaving one industry. It's not that we're transforming industry. We're leaving one industry and going to the completely new industry. Just one thing to conclude. If nicotine would have been discovered today, which is naturally occurring substance, and you wouldn't have a history of the cigarettes or tobacco, and unfortunately we have it, nicotine would end up in the supplement shelves in the supermarkets. And now we have to go and start focusing on, on the nicotine and what that sort of the, territories offers as opportunity to PMI and to others.
It's a really weird, interesting corporate story that in 2007, you guys split from Altria, took the international market, and are now back in this market. You can't sell cigarettes in this market, but you're back in this market competing with your old parent company. Who's better positioned, do you think? To win that nicotine market?
Yeah, so obviously, I know Altria, it was our former brother or parent in the previous construct, but Altria is in a different industry. This is what I'm trying to say. We're leaving the cigarette industry and going in a different direction.
So that sounds like a difficult situation for them.
Yeah, well, look, everyone has to go and do their own strategies, okay? The fundamental principle, and I think this was a turning point at the Philip Morris International many, many years ago, when we said, why not, the question is what people are using. Is it cigarettes, is it another product? It's why people are using this product. Where is the satisfactions? One day will tell you that the first puff in the morning is helping them with something. If you don't understand the why, you cannot unwind the whole situation. Now obviously it's always easier to describe what has happened in the past from today's perspective, but this is what it is. Just because we've been going after why historically, and we put the money behind this whole thing, yes, we have a first mover advantage, no question about it. But the first mover advantage is not about the $14+ billion which we have spent to date behind all of this transformation, but it is a mindset of the people in PMI, which we're still in some places in the world, many places in the world, selling cigarettes for the very, I have to say, almost idiotic type of the reasons, where there are certain governments in certain parts of the world that they will ban alternative to cigarettes, but they continue allowing sales of cigarettes. But as absence of other language, I call it idiotic, because this is counter what everyone wanted to achieve. So the difference between us and some other companies in the cigarette space is that, we have a massive R&D center, right? 400+ scientists, etc. We have changed a lot of, more than half of my management team are the people who had nothing to do with the cigarette. So we didn't have to deal with the legacy in a sense, because by changing the team, by changing the management team and below, we actually injected completely different knowledge, different views on how we're going to go after consumers, regulations, etc. So we built this powerhouse, which now is yielding the results.
I mean, you're here right now in 2025 Washington, where every industry is trying to figure out what these new regulators want. And I think there's sort of pulls in both directions right now around HHS. There's this sort of make America healthier, ban chemicals of all sorts in all sorts of different ways. And there's also a really strong deregulatory impulse. What do you see happening? As you talk to people here in Washington, which direction is this thing going for you?
Yeah, so on a lighter note, I mean, definitely we're living at these times that you better have a good cognitive skills. Because there is a lot of data points and impulses to analyze in a short period of time. But more seriously, it's obviously when you're coming with innovative products which never exist before, etc., we always have a tendency of using the past regulations to solve the potential problems or whatever, regulate the new products. So we see this, how FDA was struggling with authorizations of these new products, etc. And I mean, we see this in other markets. I gave examples. You have a massive geographies like Turkey, India, Vietnam, and the many others. We're saying cigarettes are okay, alternative to cigarettes is not okay, but we want to eliminate smoking. So how the heck are you gonna eliminate the smoking if you don't give people alternative?
But here in the U.S., what are you seeing?
U.S. is, Zyn has an authorization, right, which is received a few months ago, so that's okay. I mean, I think that FDA has not today create a proper alternative market to cigarettes. So there is a part of a strategy of FDA which works, which is on the cigarette side, but there is a part of the FDA strategy which, frankly speaking, today it is the failure, in a sense that yes, you have a demand. There's a massive number of the adult smokers in US and other places who are demanding a better alternatives and are not willing to quit. And we know that these products exist. We know that the science is supporting this product. So you almost go to the situation of it's almost immoral that you don't give a people chance to go and resolve the problem of cigarette smoking. I think a task of FDA by statute was to create this market based on the science, and the science I think is very clear, but they have somehow failed today to do it. So
have you talked to RFK Jr. about it?
Not yet.
You did Zyn in this very interesting way, got sucked a couple of years ago into our polarized politics because for whatever reason it became a sort of MAGA coded thing. Tucker Carlson was very into Zyns and did a video where they airlifted a giant Zyn box on top of him. It's worth watching. Was that, and I always wonder, was that a positive for you because it opened, new sort of passionate market, or is that scary because it's so polarizing? How did you
I think
navigate
it's
that?
Positive on the side that people talk about this because they realize that the product helps them. Okay, so it's not something which is pulled or pushed or paid, etc. This is a natural conversations that the moment when anybody remembers Senator Schumer about a year ago, etc., make some statements about what he thinks should happen to Zyn, and essentially indicated that the Zyn should be eliminated, the ban, and people on the social media, the real people, real users for which Zyn has helped, former smokers, have reacted. Yeah. So I would treat it as the positive. I mean, we shouldn't be afraid about the conversations, right? I mean, it's a conversation, it's our role to instead of shutting down the conversation, is to carry on the conversation, explain your point of views, and I think you can reconcile and resolve a lot of problems.
So Tucker Carlson went, though, from being your main spokesman in America to starting a rival product of his own to compete against you. How's that going?
I've never met him, okay? So I always refrained of forming an opinion about the people I've never met, okay? I have read a lot, I've seen him on a...
But this new product of his, has it made a dent? Is it, is it a real competitor?
No. Well, I mean, everyone can be competitor. I don't think the product is kind of meaningful sort of a presence or sales. But it's not I would love to meet the person one day, okay? Then we could, maybe follow
I'll connect you.
Thank you.
He, at least for a minute, was genuinely the biggest fan. I'm sure he'd love to. Another sort of U.S. historic policy there in 1997, at I think the peak of the real sort of sense that this was a pariah industry, Lloyd Doggett pushed through an amendment that bars the U.S. from doing the kind of trade promotion of nicotine products that it does routinely with other American exports. And I wonder if you've talked to the Trump administration or the Congress, or if you hope that they would, because I think a lot of your focus right now is trying to push other markets into letting you shift from cigarettes to e-cigarettes or to ZYNs or whatever. And I wonder, I mean, is there a role for the U.S. government in that? Have you talked to them about that?
Yeah, so that's actually an excellent question. Thank you. I mean, so the Doggett Amendment was about U.S. diplomacy, U.S. agency, etc., not helping tobacco or cigarette companies at the time to promote their products. Yeah. That was, we can discuss, it makes sense, doesn't make sense, but this was the idea behind this regulations of this law. How this over a period of time has been interpreted that, Philip Morris International, it represents American company paying taxes here, listed on a stock exchange, American asset, which obviously has the massive operations abroad and requires the same protections by the U.S. diplomacy abroad as any other U.S. assets. And this, by many administrations, has been or people executing, right, have been over-interpreted that we cannot help Philip Morris. So, from time to time, we end up in trade disputes, tax disputes, like many other, businesses operating on the international arena. And, I don't think it should be like that the U.S. administrations will say, I cannot help you because you're a tobacco business. So we're not talking about the product, we're talking about the principles.
Have you found any support here?
No, but I think we will talk with the administration, but I think administration also trying to show a little bit of empathy. I think a list of the problems which President Trump has put on the table is pretty heavy weight. And maybe we help the administrations to resolve the big ticket items first before we go and bother them with some other items. But I think it has to be resolved, and it feeds into the new line of administration that why you have a government, why you have a diplomacy, why you're spending a taxpayer's money, are they doing your job as their role has been defined or not? That's the pretty very logical question.
And as somebody just operating a big global business, although one that obviously has sort of a history of being a bit recession-proof, what are you seeing? Are you seeing signs that consumption is starting to slow, or that, I don't know, just what are you seeing across markets?
If we define, if our strategy is based on helping smokers to unwind smoking, leave cigarettes behind, etc., hence this whole array of the heated tobacco products, e-vape, pouches like ZYN, etc. We have a massive demand in front of us. There is more than 1 billion smokers in the world, so including obviously US. So we don't have a problem in a sense that the demand is disappearing. There's actually demand, and it's growing with the popularity, awareness, etc. There is more and more smokers who try to convert to this product. So on that side, I think we're in a good space. From a tariff space, which is a very hot topic, historically, we always had been the supply chain was designed by a block of countries. So Europe was almost self-sufficient, US is self-sufficient, etc. So, frankly speaking, the impact of the tariffs as they are today, or what I hear, is not really something which would bother us at this.
Would you worry that smokers will, as in a sort of straitened economic situation, if they're low on cash, that they'll be less likely to buy, a more expensive e-cigarette or something like that?
Smoking is a little bit like coffee and a few other stimulants which we're all using, okay? And this is one of these relatively not expensive pleasure people have in their life. We should look at the smokers from a more positive perspective than a negative perspective. They're the same humans as the non-smokers. Some people have this habit, some people have other habits. If we find the solutions of how to help this group of people, we should help. So the fact that we're trying to go out of cigarettes, I'm not changing my opinion that, smokers, they take a pleasure from smoking cigarettes. And our job is, can I deliver this pleasure in a way which completely changes the risk profile to the user? And that's the whole thing. But don't take away pleasure from people. This is a very bad idea. Very bad idea.
That's a good rule to live by. Well, I enjoyed seeing the way that you yourself consume ZYNs, which is that you mix a bunch of different flavors in the same box and surprise yourself. So.
Yes, but in addition, despite the fact that as a CEO, especially these days, the life is full of surprises. But every time I take a pouch, I don't know which pouch I took because I mixed them in a pack. So remember the Forrest Gump magic.
That's incredibly incredibly chaotic. Well, thank you so much for joining us.
Thank you.
Please welcome Joanne Crevoiserat, CEO of Tapestry, and Liz Hoffman, Business and Finance Editor at Semaphore.
Hi, Joanne.
Hi, Liz.
Thank you for joining us.
Well, thanks for having me. It's a great conference.
We're having a lot of fun.
Yeah, I'm sure.
So Tapestry makes very high-end goods, mostly in Asia and mostly sold here. So how are you thinking about what has been going on?
Well, take a step back, and for those of you who don't know Tapestry, we're the parent company of three incredible brands, Coach, Kate Spade, and Stuart Weitzman. And to your point, we have a very diverse supply chain. We make our product in a number of countries, mostly outside of China. We have very little production in China, but diversified mostly through Southeast Asia. And we do business all over the globe. North America in the United States is an important market, but we have many important markets around the world. And our focus and our concern 100% all the time as a company is to focus on the consumer and deliver the value that they recognize, the relevancy that they recognize, an incredible product. And this is a consumer landscape that has been changing fast. It's been changing for over a decade. The consumer and how they shop and what they value has been moving very fast. And we've spent a lot of time as an organization thinking about how to win in that environment. And there are three areas of focus that we've had. One is we have to stay close to the consumer and understand what is impacting them and how they're feeling. And then we have to invest in bringing the innovation to the consumer that they recognize. We also have to harness digital and data. I know that's been a conversation in this conference. Innovation is happening fast in that space. How can we leverage that to know the consumer better, but also improve our operations to deliver better value for the consumer? And the third thing we focused on, even as we went through our transformation, it's even more important now, is embedding agility into our business model. That was important to us because the consumer is moving fast. And then COVID happened, and the agility required to win in the environment, the stakes went up incredibly. We had incredible demand destruction, we had incredible supply disruption, and to be agile and navigate through that required new muscles. And I would say the environment today makes that even a higher priority. Things are changing very rapidly, as you're covering at this conference, changing by the day. And we have to be agile and be able to react based on where the consumer is, what the consumer is feeling, and how we have to deliver value and innovation to the consumer.
One thing I think consumers really love about your products is that they feel more expensive than they are. They're really very well made, but at a fairly affordable price point. Can you do that without taking advantage of low-cost, places of production and pretty finely tuned supply chains?
And these are supply chains that we've built over decades, and it is part of the value equation. When a consumer is thinking about making a purchase, and consumers today are they're very choiceful. They have a lot of choice, and when they're considering a purchase, quality and craftsmanship is part of it. We grew up as a handbag maker. Coach is an 80-year-old brand that started manufacturing in New York City in 1941. And we have retained the understanding of that craftsmanship. And we have built a supply chain around the world of craftspeople. And we call it craftsmanship at scale. These are people who are hand stitching leather material and bringing the compelling silhouette to life for consumers. And so it takes a long time to build. The value that we deliver, the craftsmanship, the innovation that we're bringing to consumers at this price in the marketplace is the value that we offer to consumers. And that is something that we're focused on continuing to nurture. And it does require a diversified supply chain and investments in that supply chain that have taken decades to build.
To state the obvious, I assume you could not deliver that same product at that same price if you had to make it here.
Well, we do some production in the United States. And remember, I use the term craftsmanship at scale. We serve many consumers, and what we build in the United States, we have a Relove program where our design teams and our craftsmen reimagine bags and rebuild bags for consumers. And we're seeing consumers really gravitate to that product. They love that product, but it is a small part of our offering, and to think that we could build the scale to serve consumers around the world, I think it's a reach in the United States. And the supply chain that we've developed globally allows us to build, as I said, craftsmanship at scale. We have invested in the United States in apprentice programs to bring leather craftsmen into the organization to help support the business that we do there. And it's a nice complement to our global supply chain.
This is something we've heard, I think, this week from a lot of folks in your position, which is that even if I wanted to bring everything here, we don't have the right people. Like we just have we have a workforce that is just trained to do different things. And I'm curious whether you think it's mostly a skills thing. Is it the machines aren't in the right place? We can't get the right tools. We can't get the right cost structure. What is it that's tricky about reshoring broadly?
Well, it's a little bit of all of that. Consumers have choice, workers have choice, and the choices that are being made and the skills that have been developed over time have moved away from our category. And as I said, we have apprentice programs where we're bringing design talent in and we're bringing leather craftsmen in. And some of those come from our store associates who we do some of that work in our stores, and they become attracted to that part of the creativity. There's a young consumer population that likes to be part of the creativity. But having said that, the barrier is more on the numbers for us in terms of serving the broad business and the scale that we're delivering into the marketplace. It would be difficult to see that workforce reshored here entirely.
Is there the Treasury Secretary said, a couple weeks ago that the American dream is essentially not buying cheap things from other places. Is there a bit of a resurgence of sort of artisanal, sort of little bit of a flight to quality? It feels like there's something in the culture over the last couple of years, but it also feels like that may run into a lack of disposable income at some point.
Well, again, we're focused on staying close to the consumer, and we do a lot of work on consumers, on consumer research, particularly with the young consumer, and we are seeing an interest in being part of the creative conversation with young consumers. Gen Z is our target. We're acquiring new customers.
What's the average age of someone who buys a Coach bag?
The average age is getting younger, is what I would say. Historically, it's been in around 40. But over the last 2 years, we've really focused on attracting a younger consumer to the brand. We've got a lot of heat and momentum. I could talk about the Coach brand specifically. The Brooklyn bag made the list of the top product with Gen Z consumers. And so that focus, though, requires us to get close to the consumer, and understand what they value, not just in the product that we deliver, but how we talk to them and how we engage with those consumers and where we engage them. And we've made a lot of changes in our business model to be able to engage a young consumer in the way they want to be engaged. And one example is we created a full sub-brand of the Coach business called Coachtopia, which is a fully circular business. So every product there is made from waste or reused materials. It's a fully circular. It's made to be unmade. And when we talk to young consumers with desire to purchase this more sustainable materials and their interest in engaging with a brand, they also want to be part of the creative conversation. So to your point, we're engaging over 100 what we call beta community of young consumers who are helping us with the design of the bag. So they have input into it. So back to the question, there is an interest in the creative culture and co-creating with brands, and it is part of our focus on the consumer to make sure we meet them where they are and deliver the experiences that they recognize and that they value.
You were early, I think, in what we kind of now call, I guess, influencer marketing. It's sort of ambassador program for a long time. I remember Selena Gomez had signed on kind of the mid-2010s. And it's kind of this new, interesting marketing model. And obviously, it's like everywhere now. I'm sort of curious how you think about your ad spend, which I think you increased, last year, sort of rethought the funnel a little bit. Where are you spending kind of traditional, non-traditional, digital, print? How you think about that?
Again, we're following the consumer. And we do, again, a lot of research on where the consumer is, where they're discovering. One of the things that is true is that consumers are changing in their behavior in terms of where they shop, but not just where and how they shop. Am I transacting online or am I transacting in a store? In fact, many of the younger consumers love the in-store shopping experience, but it has changed quite a bit in terms of where and how they discover brands, and on what platforms they're doing research, and on what platforms they want to transact. Where are they discovering new brands? And so we do a lot of testing behind that. We do a lot of insight work, and we are investing. One of the things that we have and we will continue to do as we get closer to the consumer is also invest in brand building. And those investments include marketing investments. It includes the experiences that we deliver to the consumer, and we want to do that in increasingly relevant ways. Now, it could be the big reach celebrity, the Jennifer Lopez, Selena Gomez type celebrities are important, but also what is important to consumers is the smaller influencers and word of mouth. And how do you get to go viral on TikTok that reflects the trend that the consumer wants? And how do you position your brand in the right way, in the right space, when the consumer is thinking about either inspiration, I'm thinking about a fashion trend that I'm interested in, how do you show up there? Or I need to buy a gift, and it's Mother's Day, which is coming up, everyone.
Coach bags.
Kate Spade bags, yes. But all of those are really great gifts. So, showing up in the right place with the right content at the right time, and showing up authentically as who you are. So the other important piece with influencers is to make sure that an influencer is authentically representing your brand, because particularly young consumers, they can sense inauthenticity and it'll be a barrier to them. So we want to show up authentically, whether that's a big celebrity with a lot of reach, or whether that's smaller influencers, or whether that's cultivating a conversation between consumers.
TikTok or Instagram, which is more sort of interesting or important to you?
Yes. It's not about what I want. It is really about where the consumer is and what they're looking for. And we get this question all the time. What is more important? Where is this going? And I can't predict where it's going. In fact, when we were building our capabilities and harnessing digital and data, we started our transformation before the pandemic. TikTok wasn't really a thing, right? But our North Star is to follow the consumer, to do the research, to understand where they are, and build the agility to move with the consumer. And so that's how we're investing. We will continue to invest in an environment today where the consumer is choiceful. What is critically important is we have to stay close to the consumer, because in this environment, the consumer around the world will be impacted. And they will be impacted maybe differently from a timing standpoint, from a depth standpoint of what they care about, how they want to spend their money. And so we know that we have to stay close. The investments we're making in consumer insights and research and harnessing the data to better understand where the consumer's going, those are no regret actions, right? Those are investments we're going to continue to make. The investments in brand building to really support communication to the customer, the experiences we're delivering, that is also, in my opinion, a no regret action. We have to continue to invest in brand building so the consumer understands our value proposition, which I think will become even more important in the landscape as we move forward. And we have to move with agility behind those investments. So we'll continue to invest in brand building. In an environment and running a business, everybody's talking about driving efficiency and cutting cost. We'll invest. We'll invest in brand building, and we'll be maniacal about cutting costs in every other part of our business and driving efficiency in every other part of our business, but we'll lean in on brand building.
It seemed that AI-generated ads are cheaper than ones that humans design and star in. Where do you think all that's going?
Well, I think it's an incredible opportunity. And when I talk about driving efficiency in all other parts of our business, the innovation that's happening through AI will have an incredible impact in our ability to drive a more efficient business, for sure. We're already using that and harnessing the data we have. We're a 90% direct-to-consumer business, and in retail, you have a lot of data, right? And our focus has been to harness that data and put it in the hands of decision makers in our organization. And these AI tools and innovation are helping us better predict demand. Those are no regret investments, right? If you're better predicting demand, you can make your supply chain much more efficient. If you're better predicting demand, you reduce the need for discounting for things that you overbuy or underbuy. You're positioning your inventory in the right place around the world. Those are all things that drive efficiency in our business. They help us drive better answers for consumers. And I think it's going to have an incredible impact on our business, but also on the value we can deliver to consumers.
How much inventory do you generally carry? How many months do you have?
Our business, we carry, we turn a couple times a year, so we're not a fast fashion brand. We're not in and out. Our product is crafted to last, and we have icons that live in our assortment for years. And then we have innovation that we deliver on top of that may have a shorter life cycle. But generally speaking, our product has a relatively longer life cycle.
Have you, in the last couple of weeks, thought about pulling forward some inventory, stocking up a little bit, offering, pre-tariff sales? Like, what's the thinking?
Well, what we're doing as a business is, there are tactics that we're managing around the edges, and I would call it around the edges because the one thing that we're focused on is our long-term potential. And we just finished our long-range planning process. All businesses go through planning processes, and I had a couple people ask me as we were going through this, why are we planning for 3 or 5 years? Like, we can't figure out what's going to happen tomorrow. And I believe that it is critically important for us to have an understanding of where our business is going to be in 5 years and continue to use that as the North Star guiding principle of the opportunities that we see to build our business. And what we're navigating in the short term is short term, and we will adjust and address the issues that we see in the short term. But we want to make sure with every one of those actions that we're taking, we're not inhibiting our ability to build for the long term. So our eyes are on a longer term horizon, and our organization has been built to be agile and responsive to what we're seeing in the moment. And so we are taking action to pull forward some things that we have on the water for sure. Taking action to leverage our diverse supply chain. We're working with our supply chain partners. We have long-term strategic partnerships, I think, that benefit us in times like this because we're going to work through this together and we're going to navigate. It would be great to have certainty around where all of this lands so that we can move our business around. And ultimately, our goal is to delight consumers with incredible product and incredible value, and that's what we remain focused on.
I was interviewing the CEO of Carlyle, Harvey Schwartz, yesterday, and he was saying that actually one thing that he thought CEOs had learned from the pandemic was pricing power. That they never really had to kind of think about what's elastic and what isn't and how quickly can we dial up and down, and this will be kind of an interesting test of that. And I'm curious, you are such a specific price point and a value and a quality. Like, how do you think about if input costs go up X, like, we will swallow this first %, we'll pass on this %, we'll ask for this % from our suppliers. How do you game that out?
Well, the game is really, it's really about delivering value to consumers. And I will say, and I agree, that we are much smarter about managing our offer to consumers, both with data and data tools. So we have we've embedded AI tools in our business. We understand price elasticity, I think was one of the things that he mentioned. We do understand that at a more granular level. I love the direct-to-consumer relationship that we have because we pick up those signals immediately. We're not selling into third parties and waiting 6 months for the answer. We see every day how the consumer is responding to the value that we're delivering in the marketplace, and we can adjust. But most importantly, we understand and we're building an understanding of what the consumer values. And our product category is an emotional purchase. There are functional needs. People, need a handbag, need a work tote. They're going out, they have a wedding, they've graduated and they're giving a gift. Another good gift occasion, by the way, that's coming up. And so, there's a functional need there, but there's also an emotional need. What is the trend that we want to reflect? What is the feeling that somebody has when they buy one of our products? At Coach, we talk about expressive luxury. They want to express themselves. So we are focused on building innovation into our product that the customer recognizes. And what we've seen over the last few years, I think 4 years running, is growing AUR. So we've been able to average unit retail to deliver product at higher price points that the customer is responding to. It is not taking the same product that we sold last year and just raising the price 5% and asking the consumer to absorb that. It's really understanding what matters to the consumer and delivering both against their functional needs, but also the emotion and the creativity. We call it at Tapestry the balance of magic and logic, to deliver a value equation that the customer responds to. And there's been a high priority on that innovation quotient over the last, I would say, 4 quarters. We've seen the consumer, where we're delivering that innovation, they're leaning in, and where we're not, they're not. And you can see it in the marketplace. There are winners and losers in the marketplace. And that is really the defining characteristic. Are you delivering the innovation that the customer values? And that will continue to be our focus.
Quite a time to be trying to do it. Listen, we appreciate the time. Thanks for coming.
Thank you.
Please welcome David Rubenstein, co-chairman of the Carlyle Group, and Stephanie Rule, host the 11th Hour on MSNBC and NBC News senior analyst.
I would just like to start by pointing out that David has achieved such rock star status. When you usually go to a conference, like you're in the green room for 30 minutes before you're getting ready, this guy at this point rolls in about 20 seconds before, like a full G, and just walked in. So let's just acknowledge
that's
David
not the
and who
case.
he's become.
You are the rock star. You're on TV every night.
I am. But I woke up this morning because I wanted to learn from you. We all do. So I want to start with getting your assessment. If I were to ask you, let's say January 1st of this year, give us a snapshot of how you see the global economy. I'd love to get it from you January 1st, and then we'll do today.
Well, despite what was said in the campaign, at the time at the beginning of the year, the global economy was in reasonable shape, and the U.S. economy was in reasonable shape. Think about it this way. The U.S. has roughly 5% of the world's population, but we have roughly 18% of the world's GDP. So our GDP is roughly 3 times our population would suggest it should be. So we're in reasonably good shape. At the time, last year, the U.S. economy grew at about 2.4%. Unemployment is like 4%, pretty low. Inflation was coming down, not quite at 2%, but maybe slightly below 3%. So generally, a reasonably good economy. And so I would say the economy, despite what was said in the campaign, was reasonably good in January 1. Today, there's uncertainty. What business people like is certainty. Just tell me what the rules of the game are, and I will kind of figure out how to deal with it. But right now, there is uncertainty, obviously, because the policies of the administration change from time to time, and the people are reluctant in the business community to say critical things about the administration, so they tend not to do it in public. But in private, they have been telling the president, from what I understand, and from talking to some of them myself, that there's uncertainty and the tariff policy is not going to produce the kind of results that the president originally thought would produce.
Does that give you any concerns that people, business leaders, are unwilling to voice their views publicly? Throughout modern history, business leaders, especially in the last 10 years, regularly speak about how they see the world, how they see whomever is in the White House. And now this silencing, you know, what you say, business leaders speak to you privately. I'm amazed in the last 2 weeks how many business leaders are sounding alarms who I speak to privately and who won't say a word.
Well, it's not the business leaders only.
Sure, of course.
The congressional leaders have not been, at least on the Republican side, been willing to criticize the president publicly at all, or the administration. So clearly, the way this president operates is that if he disagrees with you, he will call you out in a very visible way, and people don't like to be called out and criticized in public. So it's a very effective technique that has worked to quiet people. In private, they are telling him now the economy has some real risks, and if changes aren't made in the tariff policy, you risk going into a slowdown or a recession.
It's an effective technique, but do you believe it's one that should be employed in a democracy, in the most powerful country in the world?
You don't get the people don't change their approach when they're in their late 70s. I'm in my mid 70s. And generally, you know, people...
You're really open-minded right now. In a couple of years,
so
it's all
I think people, President Trump's way of dealing with things is not to do it as subtly as maybe some of his predecessors did, or do it as privately. If he has a disagreement with people, he will say it publicly, and that has been an effective tool, rightly or wrongly, to getting what he wants. Now, he doesn't get everything he wants, obviously, but clearly, think about this. President Trump was a businessman who was, you know, reasonably successful, but not the most famous businessman in the United States. He had a TV show that got him some attention, and he took that and parlayed it into being the Republican nominee in 2016, and to the shock of everybody, gets elected president. After 4 years as president, he later found out that he was, you know, impeached twice. He had the results of January 6th, 5 indictments, I guess, or convictions, and 2 convictions and so forth. I don't think anybody has come back from as far as he came back since Napoleon left Elba. Napoleon was put into Elba, and nobody thought he'd ever come back, and he came back and ruled France again. So that Trump came back from Elba, Mar-a-Lago, and has run the country again and won the election is astounding. So he's obviously got an enormous amount of skill to be able to pull that off. He won the election. It was an election that he thought he would win all along. He thought he would beat Biden if Biden ran, but who knows what would have happened. It's clear the election was closer than some people say. If 230,000 people had voted differently in Michigan, Wisconsin, and Pennsylvania, Kamala Harris would have won. She would have won those 3 states. So it wasn't a landslide, but it was enough for him to feel he had a mandate, and he's acted fairly decisively trying to get things done. It hasn't been as easy as he thought to get things through Congress, and clearly getting a peace negotiation in Israel and Gaza is not easy. Getting an Iranian agreement is not easy. Getting a peace settlement in Russia, Ukraine is not easy. And getting the Chinese to do what he wants is not easy. So he's not going to say all this publicly because it's not his personality, but I think he's obviously gotten the attention of a lot of people, and I think he'll get some things done, some things he won't get done.
Given that he was elected president twice and everything that happened in between, I would argue he's probably the most skilled politician we've ever seen. But many people have said they were excited about this president because he was a great businessman. When he was a businessman in New York, did Carlyle ever do business with him?
We did not, that I'm aware of. We have a real estate business. We had not done business with him, but many leading business people in New York had not done business with him. I don't think he was well known at J.P. Morgan or Blackstone or Apollo for doing business with them. He was an entrepreneurial businessman who basically built a small real estate business that his father kind of had built, and took it to Manhattan and built a business there. But think about it, he came from really relatively nowhere. I remember one time I interviewed him at the Economic Club of Washington. I had gotten to know him a little bit from some things. When my parents retired from Baltimore, they moved to a suburb of Baltimore called West Palm Beach, Florida. And when I used to do family events, I would rent out a suite at the Mar-a-Lago. I think it was
Where most people have their family events.
right. So yes, but you just needed a credit card. I wasn't a member, and so he would come and he introduced himself to me, and I met him a couple times. And as the head of the Economic Club of Washington, I said I'd like to interview you, and he said okay. And he came into the green room. I think it's in December of 2015, and he said, "Ask me anything you want, but for sure, ask me 2 questions. What are they?" One, asked me if I'm going to run for president. And I think I said, "President of what?" And he said, "President of the United States." I said, "Look, Donald, I don't know you that well, but I think, going from being a businessman in New York to being President of the United States, that's a big leap. I didn't take it that seriously. Obviously, I was wrong." He also asked me to pull his hair. He said, "People don't think the hair is real, and then you show them it's real hair."
And you pulled it?
No, I said, "I don't feel comfortable. I'll ask you about your hair, but I didn't pull it." And, he had a good sense of humor about himself. And, but think about it. We've had, 47 people serve as President of the United States. And he was the first one who never had any government experience. Everybody else had either been in the government or had in military or civil experience. He had none. And to be able to go from that to be President of the United States was an incredible leap. And to do it a second time is quite something. So I know a lot of business people who say, "Hey, I'm more talented than him and I should be President of the United States," but they didn't do it. And he had the courage to run. And so while I don't agree with all of his policies, and I think he's got some challenges, and clearly there's uncertainty, you have to admit he came from nowhere and has a force of personality that is unusual even in the business world.
He sure does. How would you assess how things are going with the trade war? Ken Griffin was on this stage just 2 days ago, and I believe he said he thinks it's devolving into nonsense. And one of the big concerns is how it's making us look on the world stage and how people view the United States as a global superpower.
Well, I want to preface my remarks by saying I have no animus towards the president. I was the chairman of the Kennedy Center for 14 years. I'm no longer the chairman of the Kennedy Center. Been succeeded by the president. I'm the first person ever fired by a president and succeeded by him. So he's got the job. And so, but I was ready to retire anyway, so I don't bring that into my calculus. Clearly, the global economy is not doing as well as President Trump thought it would do. I think the reaction to the rollout of the tariff policies hasn't worked as well as he thought. And I think no one in his administration, if they're being honest, will say that this is working exactly the way we want it. Clearly, you have to get the president off of a ledge. He's not famous for saying, "I made a mistake." He's not going to do that. So you need to find a way for him to pivot. And I think his advisor is looking for a way for him to pivot, which will give him the ability to say, "I got something for what I did, and I didn't just waste my time." And so I think if he can negotiate some deals with our trading partners, that'll be a plus. The biggest challenge in the tariff world is China. You can beat up on lots of people in this world, and they can't fight back. If you're dealing with a subcontractor in Queens who's building a building with you, and you don't like the way they're handling it, you can say, "Look, I'm not going to pay you the full thing," and maybe you can negotiate a settlement. It's hard to beat up on the president of the biggest country in the world with the second biggest economy in the world, and who's going to be president for a long time after President Trump is president. And so I don't think you can intimidate Xi Jinping in a way that I think some people might have thought. I've met with Xi Jinping, and he's a pretty imposing person. And the first time I met him, I was a chair of a Chinese investment group or advisory board to a university, business school, and I happened to be the chair of it. And we get to the meeting that day, and they say, "Okay, you're the chair of this now." And the first thing they said was, "We're going to go meet with a Chinese leader." I said, "Okay." So we get on a bus, and people like Tim Cook and Steve Schwartzman and a whole bunch of very famous people, more famous than me. And I happened to be the chair because nobody else wanted to be the chair, I think. And so the first thing that happens, they show up with the senior leader, and it turns out to be Xi Jinping. So how am I going to have a conversation? I didn't really know him. So I felt like saying, well, there's a saying that a trip of 1,000 miles begins with a first step. That's a Chinese, saying. I told him, and he said, "Well, that's a Chinese fortune cookie statement." So I realized I shouldn't be quoting Chinese proverbs to Xi Jinping. But he's a tough man, and I don't think you can intimidate him.
You gave him a fortune cookie line?
Well, maybe, I don't know. Sometimes I read things in the fortune cookies. Maybe I thought they were Chinese proverbs. You never know where these proverbs are coming from. But he's running an economy that is the second biggest economy in the world. And Americans have said repeatedly, China economy is weak. China's economy is going into recession. And we've been saying that for 10 or 15 years, and they don't quite go down as much as we think it's going to go down. And Chinese economy has an enormous amount of resilience. Also, the people in China, they've lived through the Cultural Revolution. They're used to suffering. They can take a lot of downtime and adversity, maybe better than we can. So I don't think you can intimidate China into agreeing to what you want. In the first term, the president began with tariffs, and there were negotiations. There was a trade agreement. Probably wasn't really honored by the Chinese in part because of COVID. This time, I think having tariffs of 145% are just unsustainable, as people have said. Well, I suspect there'll be some negotiation to kind of change that. But in the whole, the president is getting a lot of what he wants done, not everything he wants done. I suspect he'll have more success in getting some things through Congress.
What do you think he's getting done?
I think there will be a tax bill at some type. It won't be exactly what he wants, but there will be some tax bill. Clearly, he's made a difference in things he wants to make a difference in. Whether they're right or wrong is another issue. But DEI, for example. DEI is something that was part of the fabric of the government of the United States and I'd say society. And now there's been a pullback on that. And I think it's had some impact on corporations moving away from DEI, rightly or wrongly. So he's had some impact there. Clearly, he's had some impact in cutting some spending from the federal government, but probably not in the way that he may have initially anticipated.
What do you think about that? What do you think about DOGE when you think about all of these federal jobs cut and even how they're going to impact regional economies around the country?
Okay, so the federal budget is roughly $8 trillion, and we run roughly a $1.82 trillion annual deficit. And the result of that is that we now have roughly $36 to $37 trillion of debt. That's unsustainable on a long period of time. And the only way you can solve the debt problem 5 ways. One, you can just cut spending. That's not easy to do, but that I'll get back to in a moment. You can increase taxes. Nobody wants to do that. You go to the IMF for a bailout. That's not realistic. We're too big. You can basically say we're going to default. Well, you're not going to default because the U.S. government the debt is the center of the global economy. Or you can simply say I'm going to let my grandchildren and great-grandchildren pay it off in devalued dollars. And that's essentially what we're doing now. So I don't have any great-grandchildren yet, but my grandchildren will start paying this off down the road in devalued dollars. And eventually the dollar will devalue. The bigger risk we have in the global economy is, the biggest risk for the United States is that we borrow so much money that if people don't buy our bonds, ultimately we're not going to be able to sustain this debt.
Are you concerned that's about to happen?
I'm concerned that the value of the dollar, it may not be as strong as we would like it to be. It's lost 3% of its value since January in terms of values against other currencies. So we've got to keep the dollar strong because that enables us to keep borrowing all this money. We don't have a sovereign wealth fund yet in the country. We have a printing press. We print dollars, and that's how we've sustained this lifestyle we have. But President Trump has been trying to cut it, and I think DOGE has been an effort to do it. It hasn't worked as well as I think anybody in DOGE thought it would work, or even the president thought it would work. But it's obviously an effort to cut some spending, but it's not going to have that much of an impact. I think Elon Musk said he was going to cut $2 trillion out of the budget at one point, $2 trillion out of the $8 trillion. Then he said, I think, $1 trillion. And now I think it's below that.
$150 billion.
So it's not that easy to cut spending, and it's very difficult. And Congress tries all the time to cut spending, and it hasn't really worked. So I can say I have some experience with DOGE, and I'd say it's complicated to think that they can get all these things done. And if Elon Musk leaves at the end of May or reduces his time at the end of May and he kind of is part-time, it'll have less impact than it probably doesn't have now.
I want to ask you about a former employee of yours, Jerome Powell. Has his job gotten, I thought his job was really hard post-COVID. Has it gotten exponentially harder now?
Jay Powell worked for Carlyle for 8 years. I hired him he left the George Herbert Walker Bush administration. Very nice guy. He was a lawyer by training, not an investment banker, not an economist. I think he's actually done a pretty good job for these reasons. One, he explains what he's going to do before he does it, which many Fed chairs didn't do. When Paul Volcker and Devlin Greenspan were the chairs of the Fed, they would take action, and you had to figure out later what they really did because they didn't have press conferences. After the Fed takes action now, Jay Powell comes out and explains it within a half an hour exactly what they did. And I think he's got the confidence of the board and the confidence of the people setting interest rates. I think he's done a pretty good job. If there was any mistake, I think many people made the mistake of using the word transitory when COVID began to infect our economy. And we spent, the Trump administration and the Biden administration spent roughly $5 trillion of money that was not correspondingly dealt with tax increases. So we spent $5 trillion more than we otherwise would have spent, and by doing that, you produced inflation, and it wasn't transitory. When they recognized at the Fed that it wasn't transitory, they began increasing interest rates, and now they've gotten interest rates down, or inflation rate down to slightly below 3%. Getting it to 2% is difficult, very difficult. Before, when all of us were, many of you my age, were in college, the college textbooks would say the standard rate of inflation in a global economy is probably 3 to 4%. But under Paul Volcker, when Paul Volcker came in, he increased interest rates 200 basis points one weekend, and interest rates ultimately went down to about 2%, and we had 2% for 25 years. But we also had a recession or two, and as a result of that, initially, Jay Powell has avoided a recession. We haven't had a recession for more than 7 years. In our economy, usually you have a recession roughly every 7 years, except for a technical recession during the COVID period of time, which wasn't really a recession. We had 2 consecutive quarters of negative growth.
Do you think we're in one or heading into one now? Do you think we're in or heading into one now?
When I worked in the White House, there was a inflation advisor named Fred Kahn, and he went into the White House briefing room one day and said, I think we're heading into a recession. And Carter hauled him into the Oval Office and said, look, I'm running for re-election. Do not use the R word, it scares people. But he said, I'm an honest guy, what am I supposed to say? Just don't use the R word. So from then on, he went and said, I think we're heading into a banana. And he used the word banana as a different word for recession. So the reporters wouldn't say, we're heading into a banana, they would put that in the headline. I think the economy is slowing down. If you
have the wackiest stories.
If you have $8 trillion in a budget and you chop it too much, you're going to probably reduce government spending by enough so that it slows down the economy. If business people don't want to do deals, if business people are afraid of taking companies public, if there's a freeze on spending because we don't know where the rules of the road are and what the policy is going to be on tariffs, you do have a slowdown, and that could produce a banana. We don't know. I think it's too early to say. Usually you don't know you're in a banana till the banana's already in place. But as to Jay Powell, I think he's done...
If one were to say, do you think we're banana bound?
I would say at some point there will be a banana.
In this year?
I don't know. I'm not good enough to predict. I'm a lawyer by training. I'm not an economist. But I would say if you scare business people into not spending money and not investing, you scare consumers into not spending. And if prices go up very much and you get high inflation, you will probably produce a banana or some other fruit. But so I don't want to say it's going to happen because I'm not an expert in that area. But I would say there's yellow lights going on now in the economy. And I think it's not irreversible, though. Tomorrow the administration could say, well, some of the things we wanted to do, we're not going to do them right now. We've got higher priorities, and we're going to put them on the back burner. And I think some people would say, let's focus on getting the tax bill through and getting a budget through the Congress and dealing with the kind of day-to-day issues, the bread and butter issues that American consumers have to face. So I would say it's challenging. As to Jay's job, I think one of the things he's done very well is not respond to criticisms. How many of you here would like to be beat up by, the leader of the free world and just not say anything in your defense? But Jay has been very good at basically keeping his head down, not criticizing anybody who's criticizing him, and just dealing with the problems that the Fed sees. And I think the Fed has done a pretty good job of getting inflation down. Interest rates are higher than they were, 8 years ago, but that was because COVID came in and basically we saved the economy from really devastation because of the things we did in spending money, and we had interest rates that had to go up as a result of that.
We are out of time. I appreciate this Baltimore lawyer, baseball fan, David Rubenstein, joining us this morning and sharing his expertise.
Thank you.
Thank you. Thank you.
welcome Doug Burgum, Secretary of the Interior Department, and Morgan Chalfant, Deputy Washington Editor at Semaphore.
Thank you, Mr. Secretary, so much for being here. I wanted to start first because you made some news this week. And I wanted to know if you could confirm that the administration is considering removing federal protections for at least 6 national monuments, and if you can give us a sense of the timeline when that might happen.
Well, first of all, I want to say gratitude to you and everybody at Seminar for putting together this incredible conference, and honored to be here. I think the thing that I'd want to do on this topic is reassure the public, because people are confused about the commitment that we have to preserving and protecting America's best places. But we should also take a look at the fact that we do want to follow the law. When we take a look at how national monuments have been created in America's history, the majority of them have been created in the last weeks of a president's term, whether it's their end of the term that they're in office or end of second term. The original enacting legislation for creating a monument was created in 1907. That was Theodore Roosevelt, who had the wisdom to put away hundreds of millions of acres of public land. And it was called the Antiquities Act. And specifically in the law, it said that the least amount of acres, not the most, the least amount of acres to be able to protect the objects. And the objects are like Indiana Jones types objects. So this has been a fantastic tool for cliff dwellings, for archaeological sites, and it's been used very effectively. But about 25 years ago, then there was an idea that somehow this could be a precursor to creating a wilderness area or creating a national park, and you just needed a stroke of a pen of the president to say these vast swaths of land become a monument. And as we've seen and hear from the states, the locals, the tribes, and others, often there isn't the consultation that goes in as this rush before they leave office to, leave a legacy or protect land. And I think when we're taking a look, we have an executive order from President Trump to review these to say, are they the appropriate size relative to what the initial enacting legislation is? But in making that effort, we're doing that with consultation of tribes and locals and and the states and all the people that are able to do that, because we're, in our country, we don't have a shortage of federal land to take care of. I mean, we've got in interior alone, there's 500 million acres of surface, 700 million acres of subsurface, 2.5 billion acres of offshore. And in some of the states where these monuments have been created, they already have, in the case like a Wyoming, it's plus 40%, Utah plus 60%, Nevada plus 80%, Alaska similarly. We have western states that are being choked because they have so much public land and there's so much overreach by the federal government and overlap between federal agencies and state agencies that we're creating a suboptimal protection and suboptimal use of those public lands.
And so are you expecting that, timeline to come up quickly? How soon are you expecting to make some decisions on that?
We'll go through a thorough review and whatever that timeline lays out, but this is not it's not a top priority of the administration in terms of all the things we've got to face. I mean, we're facing a number of challenges both domestically and globally in terms of peace abroad, prosperity at home, and that and the centerpiece of all of that is energy and energy policy, and that's been the primary focus. But people that are concerned and care about public land should know that we care deeply about them as well, and we look forward to everyone's input on those discussions.
And your department also announced earlier this week its plans to significantly fast-track approvals for oil, gas, and mining products. What makes you think you have the legal authority to do this? Are you confident if you face a legal challenge here?
Well, we're very confident. In addition to those you mentioned, it also includes geothermal, it includes hydro, it includes all forms of energy that would constitute baseload power. It does not constitute fast tracking more projects that would be that would produce intermittent power because the incentives and the tax incentives to create more intermittent power have created a whole industry around harvesting tax credits, which have created a dangerous situation for our national power grid at a time when we need more electricity than we've ever needed in our history. We need more of it immediately. We need more electricity to win the AI arms race against China. And so part of the legal authorities are based on President Trump declared a national energy emergency, and certainly that's warranted given the situation that we're in right now relative to our grid being at risk. We had this winter, we had times where over 200 million Americans were in an area of high risk grid failure across our country. And part of that destabilization again is this massive investment that we've made in intermittent, around in some of the same mistakes that Britain, Germany, and others have made with the idea that built around a premise that the biggest existential threat to the world is a degree of temperature change in 2100, when the real existential threat that we're facing is perhaps Iran getting a nuclear weapon or losing the AI arms race to China. So reorienting around what the real immediate threats are to our country and to the world is part of what's driving a policy that says we've got to get back into the business of having abundant, affordable, reliable baseload energy. And if people are saying, oh, well, tell us about your concern on the environment. If people are concerned about the environment, they would want to have every ounce of liquid fuels and every electron produced in America, not someplace else, because we do it cleaner, safer, smarter, healthier than anywhere in the world. And the incredible regulatory regime, which has tried to drive out affordable, reliable baseload energy from our country in favor of heavily tax subsidized intermittent sources, that is the same mistake that Germany made. It's a mistake that Britain's made. I mean, that you lose your steel industry, you deindustrialize, and in a world where we need electricity to win the AI arms race, it actually it would be catastrophic for our country to continue down that path.
In addition to your secretary role, you're also chair of the National Energy Council. I wanted to ask you, we've seen U.S. oil production drop this year, and the potential for economic slowdown due to tariffs is also causing concerns about a drag on demand. Can you guarantee that production, in 2026 or in 2025 will be higher than it was in 2024? And what's your strategy for getting there?
I can't guarantee it, and I think that there's been, again, a big misconception that somehow, under the years when President Biden was in office, that people saw, that oil production and gas production was up. And I would just have to say, at the time, being a governor of an energy state and one of the largest oil and gas producing states in the nation, North Dakota at that time, this wasn't because of the Biden administration. It was clearly in spite of the Biden administration, because you can go back and look at the lists of dozens and dozens and dozens of lawsuits led by Western states and energy producing states, including ours, pushing back on the federal government for not holding the legally required lease sales on public land quarterly. I mean, they were held every quarter from Harry Truman forward until Biden took office, and then they stopped holding them. When you stop doing lease sales, then the private companies don't get a chance to send a check to the federal government to help, pay down debt or reduce the deficit. And then, of course, the public participates in a royalty. So if we're developing resources, whether it's timber, grazing, mining, oil and gas on public lands, that's revenue to the federal government. That's revenue that helps balance the budget. So there is saying, no, we're not going to generate revenue on public lands. We're not going to take America's balance sheet and produce revenue. We're going to stop all of that because we're chasing an idealism around climate extremism, which may not be, I don't believe, is the biggest threat that we're facing right now as a country. If we had record production under Biden, it was because of the work that President Trump did during his first term. That's when permitting was actually allowed on a common sense basis. That's when people felt comfortable to make the capital investments to develop our resources. And thank goodness we did, because if we hadn't done that, if it wasn't for the entrepreneurs, the risk takers, the job creators that are in that industry, we wouldn't have had the energy to become a natural gas exporter to support Western Europe when they were completely in the grasp of being dependent on Russia for the energy just to make it through heating their homes for a winter. So again, we're trying to get back in the game that we were in before. And of course, when we do that, we know that when you're producing that energy here, it's good for the global environment. Because if you stop producing U.S. energy, you don't do anything to demand. You just shift the supply to countries that don't do it as cleanly and as efficiently as we do in the U.S.
I'm glad you mentioned this idea of America's balance sheet, because I did want to ask you about that. The administration seems to be in the middle of an effort to basically slap a dollar value on national assets. You've talked about treating U.S. natural resources as national assets. Why is this important? Why are you doing this?
Well, I think the one thing for sure is that everybody has heard, if you live in the United States and you pay any attention to election cycles every 4 years, there's a constant barrage of, we have $36.5 trillion of debt. The debt. Yes, this is a big issue that needs to be addressed. Interest is now our biggest cost that we have from the operating side of the federal government. So it's a huge issue. But I never hear anyone running an ad saying this is how big our assets are, and we have hundreds of trillions of dollars of assets, and every American should feel good about the fact that if this was distributed to all of you, this is your percentage of assets. Because we do have people that are take the 36.5 trillion number, divide it by Americans and go, look, this is the burden on every American. Well, why don't we do the other side of the balance sheet? And there ought to be an understanding of just how wealthy we are as a nation, that we're living in a time of abundance, and with the new technology, it's innovation, not regulation, that's going to allow us, whether it's critical minerals, whether it's a future for nuclear, whether it's the fantastic opportunities we have in geothermal on public lands. All of these represent enormous opportunities for us to create a country where we've got clean, low-cost, affordable energy for everyone. As opposed to we're in this crazy battle right now where we're battling about somehow the word green got into this thing, like a green is good and others bad. No, green can be good if it's geothermal, if it's hydro. It can be bad if our entire grid is intermittent sources that are highly tax subsidized, that cost every American a lot of money to produce and then create vulnerabilities. Mining can be clean and innovative. We spent the last 3 or 4 decades killing mining in this country, and now we find ourselves highly dependent on one of our adversaries for the critical minerals and the rare earth minerals, for defense, for technology, for automotive. I mean, all of our basic industries need that, and we have all those minerals here in America. We have them all, but we just have to build a structure where we can actually develop them. So on the asset side of things, when we take a look, when I talked about all the land that just Interior has, Interior, if it was a standalone company, would have the largest balance sheet of any company in the world, by far. With the 500 million acres of land and 700 million acres of subsurface. But we don't really even know what the dollar value is. There was an estimate that just came out recently that just our coal resources, which of course coal in the U.S. includes metallurgical coal, which we need for producing steel, and in that coal there's also critical minerals. It's been a word that's been coal's been a word that has been somehow twisted to being a bad thing. China is working to become the largest industrial power in the world based on coal, 60% of their electricity. They opened 94 gigawatts of coal plants last year in China. That's more than all of California's power needs and all of New York's combined. A single gigawatt's Denver. So they opened up 94 Denver's worth of coal plants last year. And guess what? Not with US 2025 beautiful clean US coal plants. No, they're doing it with sort of 1970s technology with no concern whatsoever on emissions. But that is the coal resources in the US could be worth 8 trillion with a T, the coal resources. We're getting back in the game at the US Geologic Survey, which is part of Interior, as we say, to map, baby, map, because we've got undersea critical mineral assets, we've got undersea oil and gas, and there's just in the Gulf of America, there was just a report that came out that in one little survey area, we may now have 23% more oil and gas than we thought. So let's add all this stuff up, and if you ask why are we doing this, if you add all this up and we come back and we have $100 trillion, $200 trillion of assets against $36 trillion in debt, what will that do to the 10-year interest rate. I mean, I think it would probably have a effect where people would say, hey, this country's in great shape, as opposed to on the brink. They have a pathway, they have a plan, they're going to be generating revenue from the asset side of their balance sheet. They're going to pay down their debt, they're going to balance the budget, and then we lower the interest cost, and every time we get a click down on the interest cost, that saves everybody that's listening and their children and their children's children. It saves them money because interest cost right now, that's the way. If you want to reduce government spending, reduce the interest rate.
I want to squeeze in one last question. The president's tone on renewable energy has been pretty hostile, and one of your first moves was to kill an offshore project in New York called Empire Wind. There are a lot of people here that are thinking about investing hundreds of millions of dollars in wind, solar, offshore wind projects. Should these people be taking their investments elsewhere to other countries, or can you reassure them of the permits and promises of the U.S. government on the books?
I wouldn't say that there's any hostility towards quote renewables. There's hostility or at least concern about that we've gone too far towards massive tax subsidies for sources of energy that are by definition intermittent. The wind doesn't blow 24 hours a day, and the sun doesn't shine ever 24 hours a day. I mean, solar itself is effectively a system where there's a catastrophic failure every night because there's no sun shining, and then there's no electricity produced. And people say, oh, there's hope for batteries, and yes, there are. But having spent 30 years in tech, I mean, batteries get better at about 2% a year. They're not running on Moore's law. There's not some magical solution that's appeared yet where we could have cheap and affordable load shifting by using batteries in conjunction with intermittent. I mean, maybe there's some incremental solutions, but not at the scale we need, and not at the scale we need when we've got more demand for electricity than ever before than we do right now. And in terms of offshore wind is like 3 times more expensive than onshore. And I can tell you, as we're a big wind producer in North Dakota, but there was a lot of sense of, hey, not in my backyard. There's people that don't want wind projects that cover 8,000 acres, that is in their thing. And there's people that live in urban areas that want them all in the rural areas because they don't want to look at them either. And then when you put them offshore, the people on the shore don't want to look at them. And then of course, there's been the whole case around renewables those were the folks that cared the most about the environment. And there's a report on Empire Wind that was not released by the Biden administration that talks about when you put 2 billion tons of rock in the water, when you put 1,000 foot towers, then all of a sudden you're affecting fisheries, you're affecting shipping, you're affecting the sonar capability of whales, you're affecting a lot of things. And if a report like that had come out against an oil platform, and then that oil platform had been greenlit, everybody here in the world would have seen that report. And we just found this report 2 weeks ago, and that was part of our decision to put Empire on pause for further review, because if even Biden-era biologists are saying this thing, reported lacked rigor before it got approved, that would probably be something, if the shoe was on the other foot for a different source, this thing would have never gotten a permit, never ever been permitted, much less been greenlit to accelerate. And of course, again, if someone wanted to stop offshore wind, all you'd have to do is stop offering super rich tax subsidies, because that's what's driving that industry. The FERC queue right now is 95% wind, solar, and batteries for new projects at a time when we need more base load to be able to power AI. And any state in this country that is saying we're not going to allow to have natural gas pipelines and linear infrastructure, we're not going to allow nuclear, we're not going to have those kinds of power sources, we're going to bank on wind and solar. If they do that, they're not going to have any AI data centers. They're not going to have manufacturing, because nobody can have manufacturing if you don't have low cost power. And and take a look at Germany. Germany went down this path fed by misinformation from Russia, who was happy to have Germany kill their nuclear industry, kill their coal industry, and do all that. Germany spent $500 billion pursuing this dream of wind and solar, and what did they end up with? They ended up with $500 billion of cost. They ended up producing 20% less electricity because they shut down all of their base load, and the electricity cost 3 times as much. So who of the business people here would spend $500 billion to end up with something that produces less but costs 3 times as much? And so we just have to, as business leaders, have to step back and go, wow, if we want to solve the issue of CO2, if that's the last remaining issue, there are hundreds of ways to do that. And in places like in my state of North Dakota, where we're doing carbon sequestration, we were taking 100% of the CO2 off of things like ethanol or coal plants. We're using EOR for injection, for enhanced oil recovery, and we were producing a carbon negative barrel of oil. There was more CO2 staying in the ground than there was being produced when it was coming up. So it's not like that somehow with these policies we don't care about the environment or don't care about it. We just go, no, there's a way to do this that's 10 to 15 times less expensive per ton of CO2 than all of the Biden era, EV CO2 subsidies, where we're going to spend all this money, but we're going to avoid a ton of CO2. How about we capture it, use it as a value-added input? How about we sequester it? How about we use it for other products, including, because carbon we know is a super lightweight, powerful tool, and there's an opportunity to capture that, use it for road equipment. I've even seen samples that look as nice as any granite countertop, and they're 30% by weight CO2. So the innovation that can come from solving this problem is massive. But we're not going to get there bankrupting ourselves, chasing a climate extremism ideology that's turned into a giant business that feeds lawyers and feeds funding and feeds organizations around that. We have to just sit back as a country and go, hey, who are we competing with? Who's been successful? Who's bringing manufacturing? Who's generating AI capability? And what do we have to do to do that? And energy policy is not a separate industry. Energy supports every other industry. And energy right now, for AI data centers, we're not like processing health claims or doing that. An AI data center is manufacturing intelligence. And when we manufacture intelligence, that's what allows us to have a successful defense of our country. That's what allows us to cure cancer. That's what it's going to allow us to transform education and healthcare and every other thing that we do. And so, the power there is an urgency where we do not have enough power. Because, by the way, China's also opening up 30 coal plants, spending over $100 billion on hydro. We may be ahead of them on the technology for AI. They're way ahead of us in terms of building the horsepower to power that, because this is where you convert a kilowatt of electricity into intelligence. That's never happened in humankind. I think we need to understand that we're at a moment in this planet's history where everything is about ready to change. And so we need to have the humility to understand the things that we may have believed for the last 10 or 20 years, whether it's corporate CEOs or others, around climate or around other things, which is, hey, we can solve all those issues. We can solve all that, but we can't if we don't have enough power to do it.
Secretary Burgum, thank you so much for your time. Really appreciate it.
Thank you, Morgan.
Please welcome Governor Tate Reeves of Mississippi and David Weigel, politics reporter at Semaphore.
All right. Thank you, everyone, for being here. Thanks, Governor, for being here.
Thanks for having me.
Yes. So I'd like to, if I can draw you out on a subject you don't want to talk about, I'd like to talk about AI. Because you've had a very busy year already with AI in Mississippi. And it might be easy just to catch everybody up. Starting with the executive order on AI, what have you done in Mississippi in the last few months on this?
Yeah, I think that it's an incredibly important piece of our economic future in our state. Obviously, we've been successful at attracting large data center projects in our state. To Secretary Burgum's point, or Governor Burgum to me, but he is exactly right. The states that have availability of power are the states that have an economic future. And the states who do not want to have an availability of power are going to struggle in the future, in my view. And so we also think that workforce is incredibly important. And so I actually have done a couple of things around that. We did sign an executive order outlining what Mississippi's goals are in the AI space. We also created what's called what we call MAIN, which is Mississippi's AI network, which consists of all of our community colleges, we have 8 institutions of higher learning, including our historically black colleges, and we have one-stop shop focused on how are we going to train the workforce of tomorrow. And I think if you talk to a lot of the players in the AI space, Mississippi is actually far ahead of many other places in terms of creating exactly what that looks like. How are we training folks at our community colleges to be prepared for those jobs? How are we actually creating 4-year degree programs for people in that space? And it's going incredibly well, and we think we're setting ourselves up for success in the future.
It's very early, but just what does it mean exactly? You set up these institutions. There's the network, which I think no other state has.
I think that's right.
Of that, yeah. But are there early conclusions from what you've seen already?
Well, what I would tell you is it is very early.
Yeah.
But we were actually out in California for a conference recently, and our head of workforce development, workforce training, was on a panel, and the person that was doing the panel basically commented that Mississippi is further ahead, way further ahead than California, which was a shock to many of the people in the room. But we're also further ahead than most. And so what we are seeing, and now we're getting more and more partnerships from companies that are looking to locate businesses, but also looking to hire, because it's going to take people with a different level of skills to be able to provide and fill those jobs. And we are doing, I think, something that very few states are doing in that regard.
And you also just are getting rid of the income tax, a long-term project, state income tax. What, in planning that, you've spoken about it, what the impact was going to be, what the advantage of the state was going to be. But one, what is the impact going to be? And two, how does the state without income tax pay for everything it's paying for now?
Yeah, so let's start with where we find ourselves financially in Mississippi. Mississippi is a state that in 2024 had the lowest unemployment rate in the history of our state. For the eternity of my lifetime, I'm 50 years old, Mississippi has always had an unemployment rate that is basically the national average plus 1.5%. Today, we have an unemployment rate that is the national average minus 1.5%. We have more people working today than at any time in our state's history. And our belief is that government ought to take less so that individuals who earn the money can keep more. And so we start this fiscal year with a revenue of approximately $7.8 billion, and we have a expenditure budget of $7.05 billion. So we have a $750 million surplus. We're projected to have $2.7 billion in the bank on a $7 billion general fund budget. So almost 40% of our general fund budget we have set aside for a rainy day. And so we are in the best financial shape we've ever been in. We're in the best fiscal shape we've ever been in. And it's because we have the second fastest growing economy in the country. If you look at GDP growth in 2024, Mississippi was number 2 in the nation. If you look at per capita income growth in 2024, Mississippi was number 4 in the nation. And so we've got a lot of things going right. When your economy is growing at those levels, by definition, revenue grows as well. And so what we're trying to do, because we are situated in an area of our country where you don't have to be a geography expert to know that we have Texas to our west, Florida to our east, and Tennessee to our north, all 3 of which have no income tax. So they are at a competitive advantage to us when we are recruiting business and industry into our state, and they are at a competitive advantage when they are recruiting people into their state. So this year, we had a major tax cut that I championed in 2016. We had another one in 2021. And because of those 2 successes, there are 9 states in America that have no individual income tax. Of the 41 states that do have one, Mississippi currently has the 5th lowest. But we wanted to go to 0. And we wanted to become the first state since Alaska in 1980 that actually had an income tax and is going to eliminate it. And that bill got to my desk this year, and I signed it into law. Now we're doing it responsibly. We're going to go from what is now 4% individual income tax rate in our state down to 3% by 2030. And beyond 2030, as long as revenues in the preceding fiscal year grow, as long as revenues are greater than expected expenditures in the next fiscal year, we will reduce that individual income tax by 0.3% per year. So it'll take us 10 years to go then from 3 to 0. But it has created a ton of excitement, both internally with the people who are working. It is encouraging more people to get into the workforce. We have actually turned around, COVID did a lot of bad things in a lot of places. One of the bad things that occurred in virtually every place is the workforce participation rate declined considerably. We have actually turned that around in our state, where our workforce participation rate is, which once was the worst in the nation, has turned around. We're at about 2.5% higher than we were at its lowest point. And so more and more people are entering the workforce because, again, they have more financial incentive to do so. And that's a big deal.
You've talked about success and talked about a surplus, and another part of that I'm curious about is the Trump administration did not give FEMA relief that Arkansas asked for. You can update me on the status of FEMA relief for the tornadoes in Mississippi, but the premise the Trump administration seems to be operating on is that states should be paying more of the burden for these disasters. So again, I keep doing a two-part question almost by accident. What's the status of FEMA relief now, and is that correct, that states should be picking up more of this burden?
Well, we actually have a request before the administration because we received many of the same storms that Arkansas and Tennessee and others received. My wife's hometown of Tylertown, Mississippi, got hammered by a major tornado that was on the ground for 70 miles. That is very unusual. Typically, tornadoes hit the ground, they do massive damage, and then they go up. But this particular one was on the ground for almost 70 miles and did a ton of damage. I think that as we work through the process, we expect that we will get declared a major disaster area. We will meet the guidelines that are in the Stafford Act, and we're going to work very closely with the administration on trying to get that done. When you have storms like a tornado, because we've dealt with, on one end, Hurricane Katrina in 2005, which was at the time the largest natural disaster in American history by a factor of 5x. And then we dealt with a much smaller storms like what we're dealing with here. And it has often taken FEMA quite a long period of time to determine that the damages that are claimed are actually real. We have a very strong emergency management agency that we go in and we document everything. We fly drones immediately following the storm. And so I'm hopeful that will get approved.
So is the administration, is there something you want to tell it about how ready states are to deal with their own disaster relief? I'm not trying to mischaracterize the executive order, but it does put more burden on states.
No, and I think that's what we've got to figure out. We've got to, if the rules of the game are going to change. Typically when FEMA does declare a natural disaster, the states typically bear 25% of the cost. And so any expenditure that the federal government through FEMA approves, the feds pay 75%, and the way we do it is the state bears 25%, and we then have our local governments pay half of that. And so so it's 12.5% state, 12.5% local, unless we have legislation which changes that, and sometimes we do and sometimes we don't. And I think that that's a model that has been utilized for quite some time, and I think it'll probably continue.
So another federal interaction, you sent Drew Snyder up from Mississippi to the administration to work in Medicare at CMS. And I'm curious, if we don't know exactly what they're going to do with Medicaid funding yet or waivers.
Right.
But if there is a Medicaid funding cuts, if there is more flexibility given to states, how do you want it to change in Mississippi?
Yeah, no, I'm super proud of Drew Snyder. Drew, for those of you who do not know, worked for me from the day I was elected governor and was sworn in January of 2020 until late 2024, and now is in charge of the Medicaid division at CMS, and is going to do a phenomenal job because he is very knowledgeable of the program. When you talk about Medicaid cuts, my argument to members of Congress as well as to the administration is to recognize that there are really two different Medicaid populations. There is the traditional Medicaid population, which consists of, I would argue, those individuals that ought to be on Medicaid. And then there is the expansion Medicaid population. That is the Medicaid population that the Affordable Care Act allowed to go into Medicaid that had never before been eligible. That is, and in that expansion population, that is able-bodied adults between the ages of 18 and 65 that I would argue in many instances should be working but choose not to. Well, I don't understand any world where it makes sense that the traditional Medicaid population is funded, again, in our state, 76% funding comes from the federal government, 24% comes from the state government. But the expansion population, again, reminder, the able-bodied adults between 18 and 65 is funded at 90% by the federal government and only 10% by the states. In Mississippi, we are one of 10 states that chose not to expand under the Affordable Care Act. And so I'm a little bit biased in this, but I think it just makes good public policy sense. My view is if there's going to be reductions in spending at the federal level, the best and smartest and way in which to do that is to take that 90% match on the Affordable Care Act and reduce it back towards what the feds pay on the traditional Medicaid population. So, and you don't have to do it overnight. You don't have to go from 90 to 70% just like that. You can do 90 to 88, 88 to 86 on a year-over-year basis. You could go 90 to 89, 89 to 88. Whatever you choose to do, that then allows for states, governors particularly, to make a decision. Is it worth it to them to keep that expanded population on government-run health care, or is it not? And I think some would say yes and some would say no. But to me, if you're going to find $880 billion in savings, which is what the House says they want to find in Medicaid, there are literally, that's only $88 billion a year. By simply making that change, I believe you could get the vast majority of that done fairly quickly. It takes benefits away from no one that currently has it, unless the individual states choose to take those away.
So it sounds like
with that expansion population.
So you're ready if that's the reform they make. Mississippi's ready to do it, and if there's a headline that says, "Look at all the people who are going to lose their Medicaid," you're ready to rush right in and explain.
No one that would lose their Medicaid benefits under that strategy would lose it unless the individual states chose to allow them to lose it.
Another thing, because you talked about how much the economy is growing and companies moving in. Well, if I was listening to kind of progressive think tanks a couple of years ago, they'd say, well, Mississippi, the Dobbs decision and their abortion law, that's going to be a disincentive to people moving in and investing. The gender medicine laws, that's going to be a disincentive. What's actually been your experience? What is it? Because I saw estimates in 2022, and I'm not sure they've been right, but what's the experience of having those conservative social policies on your ability to bring business in?
Well, the same progressives who said Dobbs was going to destroy our economy, that, as you mentioned, are the same ones who said when we started cutting taxes in 2016 that was going to destroy our economy and that our revenues were going to decline drastically. They've been wrong every single time. Our economy has been booming. Our economy has been growing. I mentioned earlier, GDP growth rate in 2024 far surpassed the national average, far surpassed every other state but one, and it's just it's good to see. And I think COVID and the pandemic is one reason for that, because what occurred during the pandemic is we didn't shut down our state. Our people, we took precautions, but our people got up and went to work, and there were CEOs that are probably here today and all around the country and all around the globe that said and saw that Mississippi was open for business. And then the final thing I'll just mention with respect to our state and the reason our economy has grown is while many states over the last 30 years have given up on manufacturing, Mississippi has invested in manufacturing. We've invested in a workforce that understands advanced manufacturing and can produce products. That's what we do in our state. We make stuff. And because of that, I think you're going to see continued economic growth in our state because as we see reshoring and onshoring back onto America's soil, states like Mississippi that didn't give up on manufacturing are going to be big winners.
So you've not had an interaction with the potential employer that is worried about moving to the state because of those policies. How do we explain to our we're moving from New York to Mississippi? Look at the different social policies. Not been a problem at all.
We have not seen that as a problem. And I'm sure there are some who keep us off the list, and we never hear from them. But whether it's in economic development or tourism, Mississippi's biggest challenge is convincing someone to come to our state once. If you ever come to our state, you're going to like what you see because we are the hospitality state, and we're named that for a reason. We have good people who show up to work and who can make stuff.
And I wanted to ask about the education reforms too, because that's another area where you changed. There was criticism of kind of the phonics-based education, but what have you been doing that has turned around the test score numbers education in the state?
Well, it's what the New York Times called the Mississippi miracle. I must admit, I almost choked on my catfish when I read that the New York Times was saying something nice about Mississippi. But the results are incredible. In 2012 and 2013, we instituted conservative reforms in our legislature. I was lieutenant governor at the time and helped shepherd them through, and the results are incredible. In 2013, Mississippi's fourth grade reading numbers were 49th best in the country. Last year, we were 9th best in the country. In 2013, Mississippi's fourth grade math, we were 50th in the nation. Last year, we were 16th best in the nation. And these conservative reforms, the beauty of it is that they're not just helping some kids in some school districts, all of our kids are benefiting. If you looked at our African American fourth graders in 2013 and compared them to their peers in fourth grade reading, they scored 45th best amongst their peers. If you look at it last year, they were 3rd best in America in fourth grade reading when compared to their peers. Hispanic students in our state, number 1 in the nation in their fourth grade reading results last year when compared to their peers. They were number 2 in the nation in fourth grade math results. The facts are our high school graduation rates have gone from 72.5% to 90% of our kids graduated high school. Incredible.
And what are the key parts? You talk about conservative reform, and I mentioned phonics. But what is the key thing here too? And not to give ideas to one of your competitor states, but but these seem like they might be replicable.
Well, a lot of our competitor states don't like to admit it, but they're actually copying our legislation now.
Okay.
And some of them will admit it, and it's a beautiful thing. And look, we've had people all over the country telling other states the way to do this because that's what's best for America. If you look at fourth grade reading results and really all of the NAEP testing, there were only 9 states that over the last 10 years actually saw improvements. 41 states declined in their results over a 10-year period. And President Trump has said this, and it's true. If you look at America as a whole and compare us to the other 39 to 40 industrialized nations, where we are is not a good spot as a country. And so what did we do? We started teaching the basics. We went back to phonics, which is a far superior way in which to teach reading. We hired reading coaches, spent $15 million a year hiring reading coaches and putting them in individual schools, but also those reading coaches started helping teach the teachers how to be better reading teachers. We then hired math coaches. We've now hired career coaches that we're putting in every high school. We introduced school choice. We we have ESAs now for students with special needs, which was very much needed. And so our kids that have special needs are in much better opportunities because their parents have choice now. We instituted public charter schools in our D and F districts. We changed the way in which we rate our schools and our school districts now, and we copied Florida when we said every school in Mississippi is going to be rated A, B, C, D, or F because every parent knows that if they're in an A-rated school, that school's doing well, and they also know if they're in an F-rated school, they need to do something about it. And so we really simplified things. And oh, by the way, we implemented it well at our State Department of Education. And most importantly, our teachers and our kids and our parents did what Mississippians do. We raised the level of expectations, and they rose up and met those increased expectations. And one other thing I'll just mention, in addition to all that, we also put in a test at the end of the third grade for reading. And if you don't score above a certain level, you cannot be promoted from the third to fourth grade. We ended social promotion in the state of Mississippi. And Jeb Bush used to always say, what gets measured gets done. If you're not reading at an adequate level at the end of the third grade, you stay in the third grade in the state of Mississippi. That was widely ridiculed. It was argued that it would keep literally thousands and thousands of kids being held back, but that's not been our experience at all. What's happened is everyone has rallied around making sure kids can read, and here's why it's important. Between pre-kindergarten and third grade, kids need to be learning to read, but beyond the third grade, they better not be learning to read, they better be reading to learn. And that's our theme in Mississippi, and we've seen tremendous results.
Well, thank you for talking about it, and I see a red light blinking, so I think. But no, I appreciate the time, and thank you for telling us about what's going on there.
Thank you very much. Enjoyed it. Appreciate it.
Thank you.
Thank you all.
Please welcome Olubenga Abola, CEO of Flutterware, John Kaplan, CEO and Director of Payoneer, and Yinka Adegoke, Africa Editor at Semaphore.
Okay, thank you all for being here. A special thank you to John and GB. What's really interesting about these two businesses is they have real insights into the early workings of the global economy and what consumers and small to big businesses are seeing early on. I wanted to just kind of start there, and I'll start with you, John. Just talk a little bit about the uncertainty you've heard. I mean, I have heard over the last 2 days, but you've probably heard some today as well at this conference. That everyone's a little bit unsure of what's happening in the global economy. What are you seeing so far? How's it impacting your customers?
Sure.
And so on.
So for those of you who don't yet know, Payoneer is a global business, a payments company serving 2 million small businesses in 190 countries and territories around the world. The overwhelming majority of them are outside of the United States. And so what we're hearing from small business owners who are selling from South Korea to Latin America or from China to the Middle East is that the macroeconomy clearly is going through disruption, like the early first few months of COVID.
Right.
But in that disruption, there's innovation and opportunity, and it's not deglobalization, it's diversification. And there's a confidence and an optimism from SMBs around the world to be more resilient, more diversified in their franchises. So that would be the primary thing.
That would be where you start. GB, what are you seeing?
So Flutterwave is a payment technology company, Africa focused. We help consumers and global companies get paid and pay across Africa. What we've seen so far has not been any different from the previous data we have. But we think over time there will be a natural, value chain impact to African companies, because obviously there's a lot of trade between Africa and the US, Africa and the UK, Africa and China, and over time there could be some impact regarding how that happens. But right now it's very early days for us. We're hoping, we don't see much impact going forward.
Do either of you have any direct concerns about tariffs changes here? Are there any parts of that you think about in terms of your business?
Well, I mean, I certainly think about it because we have small business customers in the United States that import from around the world who are concerned about consumer demand and will a recession happen, and if a recession happens, will demand slow? So that'd be one area. We also have U.S. businesses that are in this moment very focused on global workforces and AI, and recognizing that today, if you're a global business, and particularly a digital business, you can hire from anywhere around the world and use AI. And if there's margin compression, globalizing your workforce, there's sort of labor arbitrage that people can capture. And so we're certainly seeing U.S. businesses thinking more globally about their workforces. We have a workforce management payroll product that is new. We acquired a business last summer, and that team is reporting back to us real interest among U.S. businesses to be more global in their teams rather than less global. That'd be one example.
Are you seeing is it similar? I saw you not in there in terms of
yeah, pretty similar. Not much though regarding that, because if you look at a lot of our clients, they're in the services industry, not necessarily
that's true
products.
Yeah.
So that might not have an impact right now, but I think over time there will be also some little impact there.
Where are you, staying with you for a second, Jamie, where are you seeing growth in terms of like the sectors? Because you guys, as we've talked before, you cover quite a few sort of different verticals. Where's most of the growth coming for you right now?
One big piece is cross-border payments, right?
Right.
That's growing massively. As companies are growing and scaling beyond their borders, you've seen that happening across board. One is remittances, as well, as you always know, from the US, UK, EU into Africa. That is growing massively. We're seeing growth as well in SMBs who are selling their wares globally right now, right? Via our platform. So an average African SMB can now sell globally thanks to Flutterwave, right? So our goal really is to keep enabling them to do that. But we're seeing growth in those sectors. Travel is also growing. It's come back really strongly.
How do you define travel in this sense?
So the OTAs, then the airlines as well. You see there are growth in there. So we're seeing growth in remittances, travel, hospitality, FMCG as well.
Are you? I saw that you partnered. I think it was with Circle. Did I have that right? That whole area of stable coins, is that something that you see down the road, or is it a thing that's growing quite quickly now?
It's actually growing really fast, in the sense that when an African business wants to move money into a supplier globally, right now it will take them maybe 2-3 days.
Right.
With stables, they can do that literally almost real time, right? Because of that infrastructure. I think with the right network that Circle is building behind the entire opportunity use cases, that will drive a lot more volume as well.
Right. What about you, John? What sectors are really driving the growth right now in broad terms?
I think the most exciting thing across a business like ours with 2 million customers, services customers, over half of our revenue in the services business, is the expansion to Latin America, to Africa, into Europe, the sort of reshaping of where the priority corridors are. I think that would be one area of real growth. I do think stablecoins long term will be an interesting development area for cross-border payments, certainly for SMBs. Across our network, which is 7,000 corridors, we recently acquired a business in China, a payment service provider. We're a regulated business, and we're regulated globally. We're the third Western firm to be regulated in China to provide cross-border payments. This is really important for a company like ours, which is an everywhere to everywhere company. And 85% of China's exports don't come to the United States. You know, they go to the rest of the world. The entrepreneurs and SMBs in China are very focused on selling to the globe. So folks in Africa are buying iPhone cases manufactured in Shenzhen. That has nothing to do with tariffs.
Right.
And I think the economy is very, very global. And I think right now, looking at the disruption that's happening in the tariff landscape purely through a U.S. lens misses the dynamism of SMBs around the globe. And in this macro disruption, it's macro between the U.S. and the rest, but rest to rest is taking advantage. I mean, and looking for opportunities to drive more trade, to drive more collaboration. And I think those opportunities for a company like Payoneer, where 80% of our customers are global or more, you know, right? We're an everywhere to everywhere company, and that feels really exciting to us.
So I mean, it's so interesting. It's a really great point in general. It also makes me just think about some of the conversations that you hear in a city like DC, right? Where, you know, to your point, everyone's sort of narrowly focused on the US. But just that argument about the future of globalization, I mean, just what you're both talking about here as well. Globalization is happening with or without the United States, right?
There is an extraordinary tailwind to globalization. And in fact, this sort of tariff dynamics may be a catalyst to accelerate corridors that used to be small, nice to haves, become pathways for real growth. And you know, I think that's a moment in time now. And we have 3,700 employees on the ground in 35 countries. And next week is our Payoneer's 20th anniversary. And we're bringing 20 customers from around the globe. And what's common about all of them is the bridge between their ambition and their achievement is globalization. And so what we're seeing is creativity in the services sector. There's a US-based business, IA Blueprint is the name of the company. They help insurance companies in the US leverage freelance and contract workers across the Philippines. Well, that business's profitability depends on a global workforce. And so today, I think we will continue to see more global to global trade as opposed to less global to global trade.
You get a similar sense, right? Obviously.
Yes, obviously. I think it's spot on. It's the same thing you're seeing all over the world. The world is a global village now. That cannot change. And you see a lot more corridors growing even stronger now than before. And I think as people scale their businesses across multiple markets and geographies, naturally they will need payments that work for that market and also be able to move goods and services across. So it's to stopping this.
And it's certainly common sense to have antibiotics manufactured in the United States.
Right.
For my kids, right? Like as a dad, that obviously makes a lot of sense to me. But when you think about the global economy, I do think thinking about the 7.5 billion people on the planet is important to consider, not just the 340 million, Americans here.
Right. And in terms of, to come back to you, GB, when you think about your core markets right now in Africa, right? And are there some markets, and I know I've asked you this last time, but I'll ask again, just in terms of where you're seeing new growth or faster growth that we might not even be expecting or thinking about?
It's still the same suspects. Nigeria, South Africa, Egypt, Kenya are the principal markets. And you have big ones like DRC and Morocco, pretty big as well, and they're sprouting. Then obviously you have the likes of Ghana, Uganda, Tanzania, Rwanda, Cote d'Ivoire, Senegal, Cameroon. They're also doing great numbers. But that's where we see it growing, and you see a lot of inter-Africa trade happening now, right? Money transfer between Nigeria and Ghana, between maybe Kenya, Uganda, Rwanda. That is growing massively right now, and we're trying to create an infrastructure to drive that even more aggressively.
I mean, it's interesting you say that, because the part of the conversation, particularly in the US-Africa conversation, has been, the need for African countries to trade more with each other, because the share of overall trade within Africa is so low. and you've talked about this sort of challenge, like where you could go to have a license with the EU and it covers you and you can do a lot of business. Are you seeing any sorts of, are you having conversations with sorts of regulators or policymakers about the AFCFTA, the Africa Continental Free Trade Area Agreement? Are you involved in any of that in trying to make this happen?
Yes, we are. I'll give you a very interesting example that happened recently. Ghana and Rwanda started a passport licensing model, which is the first of its kind, where if you're licensed in Ghana, you don't have to get licensed in Rwanda anymore.
Oh, I see.
That's really, really amazing to see. If that actually gets, a huge push, that can then make Africa one market from that perspective. But that said, AFCTA is a very big opportunity. The PAPS as well, being driven by the African Exim Bank, is also an amazing infrastructure. And what is very interesting here is, if Nigeria is trading with Ghana and they have to go to US dollar first because to come back to cities, that's what the problem is. But with PAPS in between and a Florida wave leveraging that infrastructure, you can move money directly from Nigeria to Ghana. Not Nigeria to New York to Ghana, right? And that helps to make the trade faster. That creates a lot more, less volatility in currency, less fees as well. That's where I think the opportunity is to drive more Africa trade opportunity.
And to wrap up, because we've only got so much time, but I know that the other topic that comes up all the time, almost every stage here, including even with the governor of Mississippi, is our questions about the impact of artificial intelligence on the future of your businesses. I'll start with you, John. What are you've already mentioned it in passing, but I want to know what...
It's an amazing thing to watch a team of 6 or 8 people in Vietnam or South Korea or in Morocco or Egypt build a service business that rivals, looks like, operates like a business that would have been 100 people a decade ago. An SMB innovation, global workforces plus AI levels the playing field for globalization. And we're seeing that happen, rapid iteration there. It's actually the big companies that move slower than the small firms. Inside of Payoneer, of course, we're using AI, machine learning in our funnels, in our R&D teams, in the products we build. But even we don't move as quickly as a team of 10 people that is working. And I do think the leveling playing field of AI and global workforces combined with cross-border trade will be super positive for the global economy once we get past sort of this instant of macro disruption.
And specifically with your business, how much of you...
we were in planning sessions earlier this week, and it's a growing percentage of our allocation is teams working on AI.
Jamie, what are you saying? What are you doing?
Well, for us in payments, AI is driving a lot of our forward infrastructure, right? Like you said, machine learning is a major thing what it's doing right now when it comes to AI. Being able to manage fraud properly at scale. And help our merchants to stay safe within our ecosystem. AI is helping to drive that also in customer experience as well. A lot more responsive infrastructure to help customers resolve their issues themselves without having a human being having to have an interaction. So we're working on that. We're a lot of under the hood stuff that you don't actually see. Like you want to pay, we know that you paid before with Apple Pay. How do we help you use Apple Pay again to be faster? How do we optimize your rails for you? So that's how we do AI for right now.
Are you having to make major CapEx investments, or is it just kind of day-to-day add-ons to things you're already doing?
So every company AI strategy is different. So there's some vendors that come out of the box now with AI for your tools that you're using. So you don't have to do anything but use those vendors. And there's some that you have to build in. And so it's a combo of both. In some instances where we're getting new vendors who have AI built into their product, and we also build it into ourselves as well.
Okay, excellent. Well, we've kind of wrapped up, but I suppose one last question would just be, how do you see the next sort of, let's say, to the end of the year, how do you see the economy looking for?
I certainly, from a U.S. perspective, it really depends on what the tariff and consumer recession will look like.
You're already plugging in. There'll be a recession.
There's 8 to 12 weeks of physical goods on hand in the U.S. and 60% of boats from China were left in port. If factories that used to work 6 or 7 days a week are working 4 days a week, how quickly can those factories get turned back on to drive goods back into the U.S. in time for back to school and holiday? As it relates to the consumer economy, I think AI and the global workforce economy and services has lots of real strength and opportunity. But I think the shock of we're in the first few months of COVID, right? Where people are figuring it out, and the entrepreneurs and small businesses of the world are the ones who are powering through and diversifying their businesses, and I think that's really strong for the long-term opportunities.
Quick 5-second thoughts on.
I'm with John on this. Spot on.
Yeah? Good. Okay. Okay, please join me in thanking them for an excellent conversation.
Thank you, everybody.
Thank you both.
Thank you.
Please welcome Robert Bradway, Chairman and CEO of Amgen, and Liz Clayman, anchor of the Clayman Countdown on Fox Business Network.
Yes. Applause. Thank you, Bob, so much for being here. I want you all just to, and don't freak out, but look around the room and see this crowd that's been coming to this amazing Semaphore event. Thank you, Semaphore. It's just amazing voices. And understand this, every 34 seconds, someone in the US is going to have a heart attack. And 50%, up to 50% of even just people in this room will get heart disease. Don't freak out, the croissants are still delicious and I'm eating one after this. But when you talk about the drugs that are there to mitigate that and to solve it, the process of getting it from concept to a doctor's prescription pad is on average 15 years. So you're talking discovery and preclinical testing, 3 to 6 years. The trial phase, 6 to 7 years, and then regulatory review by the FDA, another 1 to 2 years. That's if there are enough FDA regulators left, RFK Jr. But we'll get to that in just a second. But only 1 in 5,000 compounds ever make it to market. Amgen has been able to get Repatha to market, and Repatha solves heart disease. It solves heart attacks and strokes. So Bob, I want to talk to you not just about how long the process has taken, but the amazing developments in AI and machine learning that are markedly speeding that up.
Well, thank you, Liz. Heart disease is the leading challenge that we face on the planet, not just in the developed world, but really all over the globe. As Liz said, unfortunately, in this country, every 33, 34 seconds, somebody has a heart attack. Now, most of those heart attacks are caused by something known as atherosclerosis, which we're all familiar with as the buildup of plaques inside our arteries. And that, in turn, is very often caused by people having levels of their LDL cholesterol that are too high. And over time, that LDL cholesterol gives rise to a plaque, and the plaque gives rise to the heart disease that you're referring to. And we have a medicine that's called Repatha, which profoundly lowers that LDL cholesterol, and in lowering the LDL cholesterol, lowers the risk of heart attack and stroke. But medicines like that take many years to develop, and the average now in our industry is 10 to 15 years to develop a medicine, as you said, and the average investment in a molecule like that before it gets to market is about $2.5 billion. So the good news is that AI can help us both identify the patients that are at risk of cardiac disease, so we can match the therapies with the people that are at greatest risk. We talk about it at Amgen as predict and prevent. We can predict very clearly which of us in society are at greatest risk of a heart attack or stroke, and we can prevent that. We can try to match the individuals who are at risk with the therapies that will mitigate the risk. And AI will be useful in doing that. It will also be useful in helping in each of the stages along our drug discovery and development process. So we're optimistic about what AI will do, but I wouldn't want you to think that it is going to turn night into day. It will be additive for sure. It should enable us to move more quickly. It should enable us to move more confidently. And I think all that's good news, because as your starting thought reflects, we need more innovation, not less, as a society. And this will help us get more.
I was talking to somebody in the startup AI healthcare, medicine, drug development space, and he told me that one of the areas, see, part of the problem that it takes so long, correct me if I'm wrong, is the trial phase, getting patients who A, fit the profile for the problem that you're trying to solve, but also B, internationally you're trying to get them to agree to do it. AI speeds that up by searching doctors' databases, and it's now down to just weeks, what would have taken sometimes a year to find a test group, correct?
Well, again, AI is being used for sure in the clinical development process, and it's being useful in helping us choose the right sites to initiate trials in, choose the right physicians to have as sponsors for the trials in the various sites, and in some diseases, helping find the right patients, again, to match the patients with the therapy. But this is one of the many things that's happening to try to speed the process of drug development. Drug development, as I said earlier, is a lengthy process, it's an expensive process, so if we're able to move more swiftly by identifying the right patients, getting them in the trials more quickly, that enables us ultimately to get drugs approved and in the hands of patients more quickly.
A lot of people who are here are in industries where you try something, maybe work on it a couple of weeks or a couple of months, or maybe a year, and look, if you have to pull the plug, fine, but the investment, and more than a decade. I'm sure you have examples of drugs in the past that Amgen has brought to market that have just taken forever, and in turn, psychologically, does machine learning and the speed at which it can now make this happen, has it made you gutsier when it comes to trying to find causes and drugs that 5 years ago you wouldn't have taken the chance on because you said it was just going to take too long?
Well, I would say yes, indirectly, but I would say the biggest factor in instilling confidence in us when we pursue a molecule is having genetic validation for the target. And so we are the world's leader in investing in human genetics to understand biologic pathways that give rise to disease. And when we have genetic evidence of the relevance of a pathway, we move much more confidently than we would without it. So machine learning and AI definitely help us to find such pathways because the human data that we have to interrogate is vast. And so having the tools of machine learning and AI in order to seize or identify the right pathways clearly is helpful for us. And then there's another way in which we're able to move more confidently thanks to AI, and that is often what happens before we enter preclinical and certainly clinical testing is we have many different molecules that we design that appear to interdict appropriately with the target. But eliminating those that might have liabilities downstream in clinical development is a challenge.
Right.
And machine learning and AI have better enabled us to choose what we think can be the winning molecules.
So machines help certainly speed up the molecular binding process and looking at that, but the FDA still moves at its own pace. And in this administration, we have an FDA that has definitely been skinnied down. They've missed a couple of deadlines on approving different drugs, on looking at the next season's flu vaccine. Have you sensed anything when it comes to a sort of a slowdown because it is a thinner FDA at this point?
Well, I'm not aware of anything in our business that would reflect a slowdown from the FDA. I would say, if anything, so far, we've been encouraged by the responsiveness that we have found from FDA in this period when there's been so much discussion about the disruption. So far, it's not proving to be an issue in our interactions with the FDA, and I'm grateful for that. But I am conscious that there's a lot of disruption and mindful of the effect that might have, not just on our business, but more generally on the industry.
Well, let's go to sort of at a higher sort of fundamental level versus the timing of this. You guys are developing Maritide, which could really be a game changer in this very hot GLP-1 obesity drug race that everybody's jumping into, or at least trying. So this would be a monthly injection versus a weekly injection. You're in trials. Tell me how close you are.
Well, you're right. We have an approach to obesity and chronic weight management that we're very excited about. It's different from what's otherwise available. So we have a molecule that addresses two pathways that we think are relevant for those that are struggling with obesity and overweight. And they are pathways that are increasingly familiar. They're so-called incretins. The thing that's different about our medicine is that it's built off an antibody backbone. And because it's an antibody or a large biologic molecule, its half-time in the body is longer than what our competitors' approaches reflect. So our competitors have advanced therapies that require weekly injections. We've said that we will have a medicine that we think is monthly or less frequent, and that's what we're studying in clinical trials. And to your earlier point about clinical trials and the pace of enrollment, I'm very encouraged by the speed at which the trials around our molecule are enrolling, and I think that reflects both the considerable need for innovation in this space, but also the potentially attractive differentiation in our approach.
So the Secretary of Health and Human Services, RFK Jr., has expressed skepticism and sort of negative feelings toward different things, whether it's vaccines, who knows, whatever, but he has specifically told Fox that he's not thrilled with anti-obesity drugs, and I think his quote was, if we just gave every man, woman, and child 3 healthy meals a day, we would cure obesity overnight and diabetes overnight. I'm guessing you disagree with something like that.
Well, I don't disagree with the idea of everyone having 3 healthy meals. I do unfortunately challenge the notion that we would be able to eliminate obesity in that way. Maybe some fraction of it we would be able to eliminate in that way. Unfortunately, obesity exists at the intersection of genetics and our environment. Yeah. So he's addressing a piece of the challenge, which is the environment that we confront all around the world. We're never very far from calories, and unfortunately, many of us have genetics that program us to consume more calories than we need to get through the day, and to store those extra calories as fat. And so what might once upon a time have been an advantage becomes a disadvantage in the setting of carrying around excess weight for years and years and years. And that excess weight gives rise to heart disease, kidney disease, liver disease, and a whole variety of other things. And the work that we and others are doing in the field now are exposing the benefits of interacting with the biology in a way to reduce the desire that people otherwise have to consume more calories. And in doing so, we're exposing the other health benefits that come from that. So, however we get there as a society, if he has a magic wand, he can wave over this challenge that we face in society, he should wave it. But however we get there, if we want to reduce the extent of chronic disease in society today, which is a huge tax on productivity and economic growth, if we want to achieve that, I think we're going to need to advance innovation, and I'm excited about what our approach to this might represent for the field.
Almost everybody up here and in the green room and out there is talking about the effect of Donald Trump's tariffs from day to day. It has been just a wild peripatetic ride, depending on the headline. I mean, this morning he's told Time magazine, well, he told them Tuesday, but it's out this morning, that he'd consider it a victory if at the end of the year, the US has 50% tariffs on all incoming goods. So we're waiting to hear about what happens with pharma. However, as Jon Stewart of the Comedy Central channel says, it's Donald Trump's world and we're just cowering in it. But that said, you guys are right in the middle of an area where he wants to repatriate jobs. He wants to bring back manufacturing to the US. You are there already. You're in North Carolina, Massachusetts, Rhode Island, California, and Ohio. What are you doing? Can you make any news today about what you are doing that would please people at the White House?
Well, I hope it will please people in the White House. It's certainly going to please people in Central Ohio, where we're announcing later today that we're going to add about $1 billion to our facility there. So we'll be pushing up on about $1.5 billion of investment in Central Ohio and adding another several hundred jobs. So we'll expect to have about 750 people engaged in our biologics manufacturing in Central Ohio in the very near future. And this follows on a $1 billion incremental investment that we announced in North Carolina earlier in the year. And it links to part of your question, Liz, which is that we were able to make the decision to invest in the United States following the tax cuts in 2017, the Trump tax cuts, which enabled us to invest heavily in our biologics manufacturing in the United States. And since that time, we've invested more than $5 billion in North Carolina, Ohio, Rhode Island, California, in expanding our capabilities in this country. And that investment in turn gave rise to about $12 billion of economic activity. So, in a long life cycle industry like ours, what we need is some predictability. The tax cuts gave us that, enabled us to make this considerable investments that we have in the U.S. And we, and I suspect others in the industry, will look for some clarity both on tariffs and taxes so that we can confidently make the investments that we need in order to make the medicines for the people around the world who need them.
But in the meantime, it's a wild ride.
It is a wild ride. That's fair enough.
Have you been watching the headlines very closely?
Not so closely as you, but I have been paying attention to the fact that it's a peripatetic ride, as you said earlier. And again, in a long life cycle industry like ours, we just need to have the dust settle so we can be clear about what the appropriate investments are for us to make. So we know that the administration and the president have a clear agenda here, and we'll adapt accordingly once we know where the dust settles on their agenda.
You're being kind by saying clear agenda. We're waiting to see some of the clarity coming. So today, the announcement, what time?
We're leaving for Columbus shortly, so we will be making an announcement in a couple hours' time about the incremental investment in Columbus. We'll be cutting the ribbon this afternoon.
Congratulations.
Thank you.
Thank you so much. Bob Bradford of course, Amgen. And I just want to say, by the way, this is marking the end of the morning session, but everybody just come back in just a couple of minutes because we will be starting back up again for the Semaphore Global Economic Conference.
Thank you. Thank you.